Good morning, everyone. It's great to be back in Riyadh and great to see everybody back here sitting comfortably together without masks. So hopefully, may the era of COVID-19 be far behind us. I'm delighted to be moderating this session entitled China is Back, although we may deliberate what that actually means and where it's back to at a time where the global order is going through incredible transitions, hurdles, and moments of reflection, I hope. So, post-COVID-19 era, Ukraine war still ongoing, a sense of huge transformation with digitization, the emergence of Web3, greening of the economy. Many of us in the region are looking forward to COP27 happening in Egypt and then COP28 happening in the UAE the following year. A lot of interest in what's going on globally and what that means for China, but also China's influence on these developments. China is still the world's largest exporter, and foreign trade, depending on the numbers that you read and which entity, but foreign trade is estimated to be 35% of its GDP. Now, despite geopolitical tensions, its main partners remain the US, China, South Korea, Vietnam, Australia, Germany. So the headlines for journalists like myself are still very catchy, but the reality is trade is still strong and remains important. FDI in China grew in the first half of this year by 17.4%. So our esteemed panel here is to talk about what this all means. I'm going to start by introducing Mingpo Chai, who's founder, chairman, and CEO of Cathay Capital. We have here also Nicolas, also known as Aguzin, who's CEO of Hong Kong Exchange and Clearing. Nelson Peltz, founder, partner of Trian Fund Management. And Patrick Zong, who is founding managing partner of M31 Capital. And Dr. Han Feng Wang, who is Chief Strategist and Managing Director at CICC. So, Gucho, I want to start with you. The world is going through incredible turbulence on a both geopolitical but also economic level. In the last 2 days, we've been hearing about what the next year or two looked like, especially with countries going through hyperinflation in certain parts of the world, but also uncertainty. What is the view like in Hong Kong and wider China, and where do you see the opportunities during this change?
Yeah, thank you very much. I mean, clearly the global environment is really tough, and the environment in China specifically was affected not only by geopolitics, by COVID and the situation. So without a doubt, it was a difficult period. But the numbers you quoted just now are quite evident that there's still some reasonable level of activity. When we look at GDP in the third quarter, 3.9%. The number you quoted around FDI, which is 17%. Most of that, by the way, coming from the US, from Korea, from Germany. And then you have quite a good level of exports and import trade balance as well. It's doing okay. It's a little softer than what perhaps some people would have expected without the COVID, but it's okay. Now, the elephant in the room is like, what's going to happen going forward? Are we seeing a bit more of a closing down of the economy? I mean, is it like becoming a bit more like less willing to interact with the world? I mean, and I can mention that what I see from the Hong Kong side, Hong Kong Exchange side, where a number of years ago we introduced a really interesting product, which is called Stock Connect, whereby international investors can connect with mainland investors or companies or targets and the other way around. And that worked really well. Then for a number of years, we didn't have many things. And over the last few months, we've just seen a barrage of initiatives to open up to the world in a way. I mean, things like we call it ETF, connectivity around ETFs, connectivity around swaps, swap connects, derivatives products, future products, bond futures that in the past you would not able to do. Now, all of a sudden, you're able to do, and international investors will be able to do. International banks that were restricted from potentially having and setting up their operations in China, all of a sudden, they have all the ability to have fully owned subsidiaries, wholly owned entities in China. I actually think that there is quite a bit of more connectivity. If I look at like the last few months, it's becoming much more interesting. I I believe that the key objective that we're seeing is China is very focused on development. So they want to make sure that they double the GDP per capita by 2035. That will give you a little bit of a floor of growth. That would be 3, 4, 5%. I mean, it's still reasonable flows. They want to continue connected with the world, so connectivity is very important. They want to modernize their system. They want to make sure that they find new ways for the market to play a key role. And while there are some doubts, is that going to be market-driven? It's very clear for me, the market will play a role in the allocation of resources. And the other area that is of a lot of focus, you highlighted opportunities. I would mention two. Technology, number one. The number of technology companies that I see all the time, just like coming to our exchange, trying to list, trying to be part of the public markets. And the number two, sustainability. I mean, it's just like some of the numbers are mind-boggling in terms of their production around green products, whether it's renewables, whether it's trees. I mean, China is going to be planting 70 billion trees by 2030. 70 billion. I know the kingdom is thinking about 10 billion by 2025 and 40 billion by 2030, but this is just like massive. So great opportunities.
And so that momentum, especially what you've spoken about in the last few months, is that opening because there's been almost this pent-up period of time when the world felt like it had come to a stop almost during COVID-19. Mingpo, I want you to follow up on that idea because there is this enthusiasm, as we're hearing from Gucho from China's side, for development and to grow markets. But at the same time, the geopolitical tensions that I started with could make the flow of capital more difficult as we go into the coming few years. So you work across 4 different continents. How do you see that happening, and what's your advice to investors?
Yeah, thank you. I'm always amazed by seeing how people lose their interest. Before is lost the interest in Western, and very quickly now they are losing the interest for China. Look at the room, it's empty. Before, a couple of years ago, this session should be the whole room will be packed. I think the nature teach us a lot of things. I don't know why human nature don't accept that you have a sunrise, you have sunset, you have tide high, tide down. Before we see China always in the morning, but sometimes you have to allow China have also sunset. Sunset is also beautiful. If we come to China, the topic, we have to talk about the entrepreneurs. Mm-hmm. When you see the young generation entrepreneurs, how they are hard worker and they really want to do things, make things happen, and you give them a little resources, they bring you kind of oak. But the takeaway of this situation for me, there are tools. First, this is of the investors outside of China. Don't take your perception as reality. You know, we always use the perception as reality. Actually, China never changed it. They continue their pace. And in this situation, for the Chinese entrepreneur, from their side, I think the mindset also should change. I'm Chinese. I went to France 33 years ago. I built one of the biggest private equity PE firm in Paris. Well, I'm still hold Chinese passport, but in France, no one take me as a foreigner. Why? Taking example, I come here thanks to Hishar invitation. My first question it is what I can do for this region. What it is the unfulfilled demand for this region. Within 3 days, I met dozens actors, local entrepreneurs in the AI, in the logistic, local funds. I realized that here, you have to bring the ecosystem. It's not just one technology or one deal or investor here or there. You have to bring the startup with the corporate. It is what I have been very successful in France. I have a half of a French CAC 40 as my partner, my LPs, alongside all the bankers, sovereign funds. So here, when I come, my obsession, I embrace the land, I want to desert. I say, I love you, Saudi kingdom, and I come to see what I can do for you.
And is that a wider
This is a very good
perception
approach.
in China, or is that your personal approach, or is that how China's going to the world
For tomorrow or for today, you are asking
for
questions?
today?
For today. Don't take your perception as reality.
Okay. Nelson, I'm going to turn to you about perceptions and realities. So, your perspective on, this moment where people are waiting for China to reopen again post-COVID, but also this pent-up growth that we see. And for quite some time, the world's been relying on China's economic growth to help stimulate the global economy. Can we still rely on that? And is our perception of China accurate?
Look, I'm the only American on this group here. And I look at things from a different perspective. Number one, I see there's a reason that we are successful because we are a nation of immigrants in America. Okay, every year we take in more legal immigrants into America than any nation in the world. And every night we take in more immigrants sneaking over the borders of the Rio Grande to come into America. Now, there's a reason for that. What's the reason? Are people trying to sneak into other countries overnight? I don't see that happening. Because they want freedom, they want democracy. It's a very sloppy way to do things. It's not efficient. But that's why we get the best technologists, for example. They all want to come to America because they can do their thing very comfortably. And China is trying to unseat us as number one in the world economically. Forget about the geopolitical issues for a moment. I doubt that will happen. I doubt that will happen, and they have a very strong focus. And today in America, I don't know what our focus is. Our focus is woke. Our focus is all kinds of crazy stuff. But yet we have those people coming in every night, every day. Many of them are very talented. They couldn't do their thing wherever they're coming from, but they're coming to America to do their thing. And that's what made America great for the last 150 years, and probably no guarantees with all the sloppiness and craziness that goes on in our country, we are going to continue to attract that kind of talent because that kind of talent wants to be free.
But Nelson, can I ask you to comment on or elaborate more on this idea that the US, in your view, will stay the preeminent economic power, but China's very much there. Are we looking at a bipolar world where the two can work together, or is it an inevitable split?
Look, when there's number one, there's got to be a number two, okay, by definition. Sometimes the number two is happy to be number two. Sometimes they're not happy to be number two. There are two kinds of relationships geopolitically. We look at them, well, this country is an ally, this country is not an ally. But that's too simplistic, because if you look at America and Japan and South Korea, we're clearly military allies, we're clearly geopolitical allies, but we are truly economic adversaries. Okay? And I think that's good, because it's respectful. We respect the way they do things, and we're happy to compete. Sometimes the competition isn't always fair and balanced, tariffs and so forth, but that's okay. We can live with that to a certain degree. But I think we have to keep that in mind as we look at all this greatness that we see around us, and we see China doing great things. And I have a great deal of respect for China, because the companies that we invest in do big business in China. Procter & Gamble, Unilever, Mondelez, GE, big businesses in China, and love the business and love the growth. But do not forget where people are trying to come every day and every night because they really want to be able to express themselves and do their thing. And I think that will always keep America number one. And I don't blame China for trying to become number one. That's what we all aspire to do. But relax, guys, and enjoy it.
Well, we'll wait and see. We'll see how many FII meetings we have before that changes or it doesn't. Dr. Ong, I want to come to you because, one, to comment on this idea of, this competition between China and the US, but importantly, also looking at China, do we see that competitive edge there that can overtake the US and become the number one economy with that creativity and also attracting the best that there is out there?
I think this is a very big topic. I firmly believe that communication and cooperation is, other than competition, is also very important for humankind and also for a better future for everyone. So even though I understand that given the situation we are now facing, if you look at the topic of FII conference on the first day, China shares a lot of similarities with the rest of the world, especially in this region. If you look at the topic we covered, like common prosperity, anti-poverty, and also green development, and digitalization and the technology, all this kind of topic, if you look at the message from this latest Congress, National Congress of the party in China, they're almost the same. They emphasize this high quality development and also green development, technology and education. And I think this kind of topic are shared by, not just by China, but also by the people from this region. Different countries have different history and culture. So even the target are the same, people do it differently, right? They have their own way. So I think other than competition, right now, especially for this world, we should have more communications and we should have more cooperations to tackle with the kind of common challenges we are facing. So, just add on that, instead of competition, I think communication and cooperation is something more important at this juncture for the world.
And I think coming out again from COVID-19 pandemic and also facing the climate challenge and the technological advances that Nicolas was referring to, we have sustainability and technological advances as opportunities. You would think there would be cooperation, but there is a lot of competition. So I guess from the Chinese perspective, where are the opportunities for cooperation?
I think the biggest thing for China right now is, the competitive edge for China is the very big home market. The 1.4 billion people are trying to, working very hard for better life. I think that's the competitive edge for China. For example, I can give you an example regarding the green development. This electric vehicle industry in China, it's very vibrant. And China right now produces more than half of the electric vehicles for the whole world. Grab more than 50% of the shares. And I can give you the number, like if you look at a lot of electric vehicles is only on the road in China. And then you need to build the infrastructures to facilitate this. You need these charge stations. And I checked the number, I find that, China right now owns almost more than 60% of the total number of charge stations in the world. Mm-hmm. So right now, China has more than 1.3 million charge stations. And for the US, they only have less than 20, I think it's something around 110,000 or something, that number. Mm-hmm. I think, so given this very big number of population and also the consumer demand, you can find these manufacturing industries in China, they have the competitive edge to scale and enjoy the relative low cost associated with this big scale. So I think that's kind of competitive edge for China. And also, if you look at the Chinese, because the market is huge, and they have a very complex industry system. That is why China survived this pandemic more competitively than other nations. As you mentioned at the beginning, that if you look at the trade, China actually export and import, the number is like 50% higher than before the pandemic. So I think that's one of the edge China has when compared with, other markets or other regions in terms of competition.
Patrick, I want to bring you into the conversation because, there's the scale issue, which I think is definitely part of the competitive edge of China, but there's also people who are looking to invest in next generation companies and will look to China and see where the opportunities. Where are those opportunities?
Before we specifically talk about next generation companies coming out of China, and I think in our conversation, language is a vague thing. Sometimes when we talk about China, we confuse ourselves by saying what China you're actually talking about. Is China the market, China the population, China the consumer, China the government, or Chinese GDP or Chinese companies? And here I want to talk a little bit about Chinese companies so we can sort of just stay focused on this. I have invested in my career in many American companies. And actually, a good number of European companies, a lot of Chinese companies. There's actually great similarity among the entrepreneurs. And this trip, I brought with me 50 CEOs from China. And many of them, they're 30 years old. They're very articulate. They have a vision. And when they talk, they say, I'm number one in this, I'm number one in that, not in China, but also in the world. And let's wear the hat of a global investor, not just a hat of a Chinese investor. Think about China in a sort of a narrow-sensed way. What interests us as global investors? What are the growth themes in the world today? I would say number one is renewable energy. Even Saudi Arabia, the kingdom itself, is supportive of renewable energy. Who are the suppliers to renewable? 97% of solar supplies are coming from China. Then people say, all right, that's commoditized manufacturing business. During the last 3 years, I was kind of stuck in China quite a long time, but I took advantage of it. I just went to see a lot of companies. I've seen a lot of factories in my life. And this year, I walked into a number of factories. To my surprise, I couldn't find human workers. It's highly, highly automated. And it's all robotics. This year, you look around the world, America had a really strong growth with robotics market, about 27% of growth. But China was the largest adopter of robotics in the world. It's highly automated, and people say, okay, just the Chinese, this is just replace low-cost labor. No, when you really analyze it along the whole kind of margins, and you start to see them moving up, doing a lot more sophisticated work. And as a result, they actually can bring their supply chain to the other countries. Most of people are talking about, this global supply chain will be kind of relocated, broken apart. I actually see something different. It's the same owner of this supply chain. They just bring their know-how, their expertise close home to America, in Tennessee, in Mexico. And if they got 5-year contract from a lot of German companies, so they would move their business to Romania, to Germany. And so it is the Chinese supply chain 2.0 in place right now. So if I may just, and what's driving all this stuff is, and also I think my friend here just talked about electric vehicles. This year, 10 million electric vehicles will be sold in a year in the world. Chinese companies will sell 5.5 million cars. But look, they're not selling those cars under other people's brand. They're doing it under their own brands. If you show up in Shanghai, I'm sure a lot of people haven't been there for quite a long time. There are some really, really beautiful products available. And they're just, people driving them on the street. They're very much comparable to Tesla. And the way you analyze, you value electric vehicles is totally different. And I'm not going to details of this, but I just want to say this. Let's put China aside, just look at important growth themes in the world and see where everybody kind of fitted in. Number one battery company in the world is called CATL. And there's a company called JNT Express. It's a logistics company. They actually started in Southeast Asia, led by a Chinese founder. They're very big here in Saudi Arabia. And so we see Shein, most of people thought this is a European company.
I'm sorry to cut you off, but I think you will have many more examples, but I think you've made the point. I know Mingpo wanted to come in on the supply chains, and then I'll come to you, Nelson. So, because supply chains was one issue that I want to talk about. I'll give you the floor.
Yeah, supply chain is clearly, because China is so stronger. And now, talk about a bit of common sense. Of course, we are not to be negative on the stage, Fox here. But a bit of common sense, 15 years ago when you go to China, at the time I used to say China is important, but not only China, I'm Chinese. Because you go there, the buffalo is so big. Anyone else grab meat and you believe you are intelligent. Today, in my village, we have a common sense say, even a skinny buffalo still have 300 kilos of bone. Before you used to eat the meat, today, with the bone, you can cook a very good soup. So you want or you don't want. 1.5 billion consumers are there. The country is there. You cannot ignore China. How much you allocate your investment in China, you can calculate. I met a couple of prominent investors in the region. They are very lucid. They know they need China. They need to increase the investment in China. I think this is common sense.
Thank you. Nelson.
Yeah. Talking about supply chain, I say to many of our elected officials in America, if we were fighting World War II today, America, we would lose. And they look at me like I have 3 heads. They said, why? Why would we lose? I said, every plane, every ship, every gun, every bit of radar was made in America. Okay, these last few years have shown us that we cannot rely on supply chains that cross many oceans. We cannot rely on it, either because they're not our friends, or because we have COVID, or because we have strikes, or because we have anything. It doesn't make a difference. And you will see in America a lot of this outsourcing become insourcing, or go to Canada, or go to Mexico, or go to places where we don't need ships, we just need trucks to get them there. It's going to be a slow process, but I think you're going to see supply chain changing. And this whole concept of globalization, it's a wonderful word, but that's all it is a word. It's yet impractical.
If I may, Nelson, I just want to add one quick point. I mean, you might disagree with me on this, but...
I doubt it.
And I actually thought last 30 years, we didn't see inflation until like a year ago. I think it was a Chinese manufacturing capacity taking a lot of liquidity into the system, in addition to housing, in addition to capital markets. Because of COVID, there's less exchange. All of a sudden, we got a big problem, more expensive for everything. And as everybody bringing their kind of supply chain back home, there will be further inflationary pressure on a lot of people's...
No, you're right, but there are other things that occurred as well before we bring it back home. To have things made in China was terrific because all the systems were set up. The roads, the harbors, everything. So it made it easy. So an American company could be lazy. Say, let's make this thing in China and it'll come like it's supposed to come on time. And you are to be congratulated on this. But after COVID and after some of this stuff, some of the American companies we're involved with have started going to Vietnam and other places where you've got to be a little bit more hyperactive because they don't have the system set up to accomplish exports the way China does. But every day they're getting better, and every day their labor is still way cheaper. And so the cost of goods
So
takes
Nelson, I
more effort.
apologize to interrupt you, but because they're telling me we're completely out of time. So, but you said something very important. Globalization is just a word. So I'm going to ask each of you to answer with one word, yes or no. Is globalization over? China joined the WTO 20 years ago. Is that financial order that we knew 20 years ago over? Yes or no?
What is
Is the global financial order that we knew 20 years ago when China joined the WTO over now? Is globalization just a word? Yes or no?
You know, you have
No,
to
yes or no?
reinvent yourself.
Okay.
I
Nicolas.
hope it's not over.
Okay. Are you sticking with it's
I
over?
said it right. No, I don't think it's over.
All right.
But it's changing.
It's changing. Patrick.
No, I think there will be a new version of it.
That's right.
Dr. Wong.
It's changing.
You and I agree.
It's changing,
Yeah,
actually.
right? Yeah.
It's changing. Thank you all. Thank you to my great panel. I apologize for cutting you off, but we're out of time. Thank you so much. Thank you.